Hey, what's up everybody? It's Fiscal Integrity Group with Business Network, and today we're talking about a topic that could quite literally change your retirement game. We're diving into the world of private lending and notes, and how you can use your self-directed IRA or 401k to generate serious wealth. Now, most people think their retirement accounts are limited to just stocks and bonds, but let me tell you, that couldn't be further from the truth. With a self-directed account, you can unlock a whole new world of investment opportunities, including real estate, private businesses, even crypto if you're feeling adventurous. But before you invest your hard-earned money, there are critical steps to follow to avoid bad investments and legal trouble. Let's break it all down. Okay, so first things first, what makes self-directed IRAs so special, especially when it comes to private lending? It all boils down to control and tax advantages. See, with a traditional IRA, you're stuck with whatever investment options your custodian offers, which are usually just your typical stocks, bonds, and mutual funds. But with a self-directed IRA, you get to be the boss. You can invest in alternative assets like real estate, private loans, or even small businesses. And the best part? All income and gains grow tax-deferred or even tax-free if you're using a Roth IRA. This means your money compounds faster, and you get to keep more of your hard-earned profits. Now, let's talk about secured loans. These loans are backed by collateral, such as real estate or other valuable assets. So, let's say you lend someone money to buy a rental property, and they secure the loan with that property. If they default on the loan, your IRA can seize the collateral, in this case, the rental property, to recoup its losses. This makes secured loans a much safer option, especially for those new to private lending. And the returns can be pretty sweet too. Now, if you're feeling a bit more adventurous and want the potential for even higher returns, you can explore unsecured loans. Unlike secured loans, these bad boys aren't backed by collateral. Think of it like lending money based on someone's word and creditworthiness. Obviously, this comes with higher risk, but if you do your due diligence and vet borrowers carefully, the returns can be phenomenal. Just make sure you're comfortable with the risk level before jumping in head first. Here's where things get really interesting. With a self-directed IRA LLC structure, you can actually write checks directly from your IRA for investments without needing custodian approval for every little transaction. It's like having your own little investment company within your IRA. This gives you incredible flexibility and control over your investments. You can move quickly on time-sensitive deals and manage your portfolio more actively. Now, before you go handing out loans like candy on Halloween, here are some key questions you absolutely need to ask. First and foremost, who is the borrower? Don't just take their word for it. Conduct thorough due diligence by checking their credit history, references, and business track record. Make sure you're comfortable with their financial stability and character. Second, what is the purpose of the loan? Is it for a business venture, real estate investment, or something else entirely? Ensure it aligns with your investment goals and risk tolerance. All right, guys, let's talk about the legal side of things because in the world of private lending, documentation is everything. First up, you need a solid promissory note. This legally binding document outlines all the loan terms, including the repayment schedule, interest rates, and any penalties for late payments. No ifs, ands, or buts about it. Next, you'll want a deed of trust or mortgage if the loan is secured by real estate. This document gives your IRA a legal claim to the property if the borrower defaults on the loan. And finally, make sure you get title insurance, especially if real estate is involved. This protects you from any hidden claims or liens on the property that could jeopardize your investment. All right, everyone, that's it for today's video on private lending with self-directed IRAs. As you can see, this strategy has the potential to completely transform your retirement savings. But remember, it's not a get-rich-quick scheme. It requires careful planning, due diligence, and a solid understanding of the risks involved. If you found this helpful, don't forget to like and subscribe for more tips on maximizing your retirement investments. At Fiscal Integrity Group, we bring light to your finances. Until next time, invest smartly.